We're joined by Commerzbank's chief fixed income strategist. That's Christopher Rieger, who joins us live from Frankfurt. Christopher Rieger, good to see you. Just to be clear, are you pretty sure that this is going to be rubber stamped by the finance ministers this week?
Well, pretty sure is relative. Yes, that is our baseline scenario. Am I 100% sure? Definitely not. It's hard to give a percentage there, so it's above 50%. However, obviously the consequences of an accident would be detrimental. And for that reason, yes, we are suggesting small tactical shorts in bunds, because bunds will be trading lower if everything is done and dusted. However, given the outside chances of an accident, certainly it would be imprudent, really, to take too much risk at this stage.
Well, you say there could be an accident, as you put it. Of course, the focus now turns to Germany and indeed other countries. Do you really sense from where you're sitting that the mood, the attitude to Germany has changed? To Greece, I'm sorry, has changed, and actually it's not going to be that easy to get this through the Bundestag?
Well, I would distinguish between the attitude among the population and the attitude among politics. Among the population, yes, certainly there are a lot of critical voices, and most people would probably not support another bailout package. However, what counts is what the Bundestag will vote for at the end of the day, or on the 27th of February. And here I'm expecting a very broad majority in favor of this second bailout package.
Now, there's better sentiment out there today, certainly. I'm wondering for how long that is going to last. Certainly for the peripheral regions, the peripheral bond markets, the likes of Spain, the likes of Italy, Portugal too, about how long that can continue and what the next shock, the next accident, as you put it, might be.
Well, certainly the shots are being called in a way in Berlin and also in Paris. However, and this is why we're following the politics there very closely. However, I would sense that increasingly nowadays the shots are also called in Athens, in Lisbon, in Madrid, if you like. And I think we're seeing a shift of sentiment away from austerity towards more pro-growth friendly measures. And this certainly harbors some political tensions further down the road. Just thinking about the French election this spring and the conservative German government, which certainly has a very different attitude towards all these things compared to the French frontrunner in the elections.
Can I put this, finally, a scenario to you, that actually Greece and Portugal should be allowed a controlled default within the European Union? Then the rescue funds, the IMF, would be able to come in and ring-fence that and those countries to protect the others. Might that actually work at this late stage?
Well, it probably depends on what you define by a controlled default. I think what we're getting right now in Greece is a controlled default, a semi-controlled, I would almost say. And in Portugal, certainly this is where the market focus will be on next. And here the politicians would be well advised to send a very clear signal now, when they announce the Greek PSI this week, that investors in Portugal will be treated differently.
Christopher Rieger, chief fixed income strategist at Commerzbank. I'm grateful to you. Many thanks indeed for joining us on Bloomberg today.